come April 1st, there have been some important changes for home loan borrowers. And these are the ones you must know about. First-time home buyers will get an additional deduction of 50,000 rupees on interest for loan up to 35 lakh rupees. The property value here can be 50 lakh or less than 50 lakh rupees, but the home loan value has to be 35 lakh rupees. The second important change which has come about is all home loans will now be linked to MCLR, which is the new benchmark lending rate by banks. We'll explain in detail what this is. We've got with us Ghulam Zia, Executive Director, Advisory, Retail and Hospitality, Knight Frank, joining us from Mumbai, and Adil Shetty, Founder and CEO of Bank Bazaar, right here with me in the Delhi studio. Gentlemen, thank you very much for being with me. Adil, so is there been any bit of excitement or extra traction in the home loan market? Are people catching on to the fact that rates have also moderated to single digit, and now you have this extra provision for first loan takers?
Yes, so a couple of interesting things have happened. One is pre-April 1st, if you were taking a home loan, your rates were linked to the base rate. Now, the RBI has tried to create more transparency so that if the deposit rates go down, that the lending rates also go down. So now the base rate has changed to MCLR, which means that today if you sign a loan contract, your loan is pegged to the MCLR, which is the new benchmark rate. What we saw starting April 1st is when banks switched to MCLR, immediately rates fell down about 10 basis points. So what was previously 9.55% immediately went down to 9.45%. Now, a few days later, the RBI cut the repo rate by 25 basis points. Now, what's going to happen is all the banks are reviewing it. And, before the end of this quarter, when they take their pricing decisions, we can potentially see a further price reduction. The RBI governor clearly called out saying it's a time when rates are going down. And he said, look at these two things in combination. Look at the MCLR regime change and the 25 basis points repo rate cut together. Now, combining this with what happened in the budget, right, wherein now you have up to 4 lakhs as a tax rebate on your home loan, 2.5 lakhs on your interest component, 1.5 lakhs on your principal component. A lot of things are coming together, which the RBI and the government are using to encourage people to take that plunge and go after their first home.
Okay. Now, the tax deduction actually adds up to 4 lakhs. Now, if you take, let's say, a long period of 20 years, and it's a pretty good deal, isn't it, for the first home buyer? What do you think?
I agree. I think it's good, right, in the sense that the government is trying to say that if you take that home loan, not only are they trying to take the rates down and make borrowing easy, in fact, they've been taking a number of measures in terms of eKYC, in terms of trying to simplify title deeds, in terms of making the process easy for the user. I think that costs of homes have been going up very rapidly. So to be completely honest, I think...
Where is it rapid? Come on, Adil. Let me bring in Ghulam Zia. Where are costs of the houses going up rapidly? Ghulam, costs of the houses haven't really gone up at all in the last 2.5 years. Let's be very honest. Most of the places, they are flat or actually a little lower than what they were 2 years ago. And here you have a situation of a single-digit home loan and, a little bit more tax exemption. And 4 lakhs is not a small amount. You think this could be just the spur which at least the budget home segment needs to start taking off again?
Definitely. The kind of signals we have received so far, these measures will go a long way to give that much needed push for the affordable housing segment to come into force, for consumers to come in and start buying the houses, because that's the biggest concern. The consumption has really taken a huge backseat, which is what Manish is talking about for the last 2.5, 3 years. Why the prices have not really been moving anywhere is purely because there's no buyer out there. And that's indeed the concern, and the government's way of handling it, whether it is MCLR or rate cuts, etc., on one side. And then, let's also not forget the Real Estate Regulation Authority, RERA, also coming in. A lot of these things are falling into place, but it's not really reflecting in the sentiments of the buyers yet. Because that 25 bips that we're talking about, which was announced today, but that 25 bips is also should be seen in the backdrop of yet another 2 or 3 such rate cuts that have happened in last financial year. But nothing has really percolated down to the end user. And as I heard just about 10 bips is not something which will get people to come out in hordes and start buying houses. So it is, I would say, more notional in nature. For it to really have a serious impact for the people to make beelines to come in and start buying their houses, we have to do much more than just that.
Adil, I think Ghulam has raised a very important point. Now, if I take January 2015 to now, RBI has cut rates by 150 basis points, but bank home loan, at least rates have only come down by about 75 to 80 basis points. And these are, of course, the best banks, which are SBI and ICICI, which are front runners in bringing rates down. Do you think there's room to do more? And how soon will that happen? I mean, you've said it'll happen, but when will it happen?
So see, no one can predict this. And you know what the banks are also saying is that they take deposit rates, and sometimes it's a one-year fixed deposit. Now, just because the repo rate changes, it's not that the base rate changes immediately. I think the key call out, right, is what are the signals going out from the regulator, right? And the governor himself has said, right, that rates are on their way down. And he's saying that he's going to push very hard, both based on MCLR and the signals that the repo rate is giving, that rates are on a downward trend. Now, every bank, right, reviews its rates on a quarterly basis. So if you look in the new MCLR regime, for 1 year, they're allowed to review rates quarterly, post which the rate review of the MCLR has to happen every month. So let's wait for those rate reviews to happen. And I definitely think the cost of credit is coming down, which is a very important signal. Now, at the end of the day, right, when you buy a home, you buy it because you like the product and because the price is right. Credit and financing, right, is only something that enables you to do it. But I think the big decision is what the home is and what the price is, which is not something the banks can control.
Absolutely. Ghulam, is that also a point to be considered? Where are those homes which are, up to 50 lakhs and you can go ahead and buy them? And also the fact that you have to actually put up 15 lakhs upfront, even if you go to the... So are we saying that this bonanza has only come in for really tier 2 cities or very, very outlying areas of big cities of Mumbai? Let's say have to go to a Navi Mumbai or beyond Thane to actually get a product at that price.
Yes, you're right, but that is restricted to, say, Mumbai or to a certain extent in Delhi. But even for a NCR, you have a lot of these regions where you do get affordable houses, albeit it is in Noida, Greater Noida, Ghaziabad, Faridabad, belts and so on, etc. So you do have affordable housing everywhere except for Mumbai, where it really hurts. Like if I'm talking about going out about 60 kilometers outside the 0 kilometer limit of Mumbai, then it really is seriously a long distance. And so far as infrastructure is not falling into place, reaching out to these areas will remain a big concern. So what the point you're raising is that the availability of buyable inventory hurts only in Mumbai. In the other cities, you have a huge opportunity. People can, once they have decided, as we just are talking about, if they are convinced that their right home is what is just across them, I'm sure they will start buying. It's only in Mumbai where that point will come into hurt us.
Okay. Adil, is there any historical evidence of at what rate do buyers really feel that, look, this is a great mouth-watering proposition? Because to me, I remember a time when rates were at 6, there was once it had gone down to below sub 7%, and there was this huge upside, or let's say upturn in sales of home.
Right.
Do you think that's the kind of figure we're looking at? I mean, you would have to come down at 8.5 for sales to really pick up.
Right. See, there's no empirical evidence, but like you said, right, when there was that entry-level home loan, which is at 8% locked for a couple of years, I think that created a lot of excitement in the market. Now, all said and done, right, this needs to be looked at in tandem with what the inflation rates are. So I'd say that currently we're at about 9.5, 9.4%. People are expecting that since the repo cut just came in and we were at 9.5% even before the repo cut came in, that some amount of repricing will happen. But the important thing to note, Manisha, is the way the loans are structured with MCLR these days, right, is when the marginal cost of deposits go down, automatically one expects the marginal cost of lending rate to also come down. So as a home borrower, right, at least I know that the regulator and the banks will ensure that the rate cut benefits are passed to me in my floating rate product, and that interest has been protected, right? So we're just saying that if you have the right product, just go ahead, keeping in mind that the benefit will accrue to you when future rate cuts happen. Absolutely.
I think that regime of being able to charge existing borrowers a higher number and new borrowers, give them enticing schemes, at least that's gone with MCLR. Well, Ghulam Zia and Adil Shetty, thank you, gentlemen, for joining me. I'm just hoping that, at least with that 4 lakh mouth-watering tax benefit that you get, and if you're able to get a right-priced home, it makes a whole lot of sense to take the plunge. It probably makes sense now than ever before to buy a home. Gentlemen, thank you very much.